On this edition of the Daily Cyclical, AMC Theaters recently announced its initial public offering. Will this be a success story like Facebook, or is it doomed for failure? We'll take a closer look at this industry. Also, gold miners have been forcibly given a colonoscopy by JP Morgan and Company. Is this a good buying opportunity? No, but we'll give you both sides of the story. Let's start with AMC Theaters. Despite some very clever marketing strategies such as renovation of low-revenue cinemas to maximize margins, AMC finds itself in a tough business. Despite the fact that the movie industry typically is considered recession-proof due to the allure of fantasy and escapism, ticket sales have been steadily declining since 2002. While studio executives cite the lack of good movies that cut across diverse social demographics, the reality is that profitability is getting squeezed on both the input and output variables. Lionsgate Entertainment, for example, ran negative earnings in 2011 and 2012, and AMC also has very high debt levels, making them susceptible to a significant downturn in the industry. I think the IPO overall is a good idea, but investors must tread water carefully. Hollywood isn't as bulletproof as it once used to be. Now let's talk about the mining industry, specifically regarding precious metals. The typical response from the gold bug community is that any substantial sell-off in the manipulated paper markets is a great buying opportunity. Some sophisticated con artists will often cite low PE ratios of distressed miners as confirmation of undervaluation. Let me tell you, nothing could be further from the truth. Statistically, there is no correlation between PE ratios and forward basis performance. Second, as with the movie industry, there are profitability squeezes that are occurring on input and output variables. However, the long-term risk with the miners is in the input cost dealing with the quality and grade of mining ore. Essentially, this industry faces bifurcation. According to Thomson Reuters, the average cost of mining gold was around $1,100 in 2012. However, due to the challenges and inefficiencies of the juniors, many of them will be forced to sell below cost, and that simply doesn't make business sense. In other words, in this deflationary environment, only the top-tier producers have the best chance of survival.